Welcome back to the Longacres Finance channel. As the stock market continues to tumble, dividend yields continue to move higher, presenting a very opportune time for long-term dividend investors. But how do we identify the best high-yield opportunities right now? Well, famous investors like Warren Buffett always steer towards quality companies trading for attractive prices. And this is one of the best strategies to follow. The hard part is finding quality companies and coming up with a fair price to pay for the stock today. I personally use a stock screener to help me narrow down on a short list of the 10 best high-yield opportunities right now. My process analyzes historical results to find the highest quality companies, and I use dividend yield theory to estimate current valuation. I don't pick the 10 highest quality companies, nor do I pick the 10 cheapest ones. Instead, I find the 10 companies that present the best combination of quality and value. And as an additional filter, I estimate the future long-term return potential for each stock, and select only those that are poised to offer at least 12% returns. This is not a perfect process, and oftentimes the stock the screener presents don't perform well. But over the past 18 months that I have tracked this strategy, the annualized rate of return is 24.73%. For me, this is more than acceptable, and thus far the strategy is performing better than the S&P, although beating the benchmark is not my requirement. So join me to find out which stocks my strategy selected for May, and after I'll talk about past performance. Let's start with the 10 chosen stocks for the month of May. Up first, we have T. Rowe Price Group with a 3.71% dividend yield. Compared to its trailing 5-year dividend yield of 2.46%, the stock looks to be about 33% undervalued right now. T. Rowe is having a rough start to the year. The stock lost almost 19% last month and is down about 19.5% since joining the watchlist in February of this year. The company ranks very well in terms of quality. It has the highest rating from all 31 companies that passed the initial screening process. It ranked 4th in terms of valuation and presents the best combination of quality and value this month. My future return assumption is quite strong at 20.75%. This is a combination of the current dividend yield, a boost from returning to fair value, and a discounted earnings forecast. This return forecast is based on assumptions and should not be interpreted literally. I use this forecast as a means to narrow in on the 10 best stocks. I'm not expecting that T. Rowe will actually achieve this rate of return, but I believe stocks with higher return forecasts should perform better than stocks with lower return forecasts. In second place this month we have Best Buy with a 3.76% dividend yield. The 5-year trailing dividend yield of 2.34% implies a potential 38% undervaluation for the stock. Best Buy joined the watchlist in January of this year and is down 10.68% thus far. In April, the stock lost 1.07%, which isn't great, but it's certainly a much better return than the 8.78% loss for the S&P. The company ranked 5th in terms of quality and 2nd for valuation on this month's watchlist, and I am forecasting a strong 18.74% long-term rate of return. In third place, we have Advance Auto Parts with a 2.87% dividend yield. A dividend yield of 2.75% is the minimum threshold for this watchlist, in case you were wondering. The company really ramped up its dividend growth in the last few years, and as a result, it looks very cheap when comparing the current dividend yield to the trailing dividend yield. The 5-year trailing dividend yield sits at just 0.51%, implying an 82% undervaluation right now. Obviously, this undervaluation is not accurate. I have taken a closer look at the business, and to me it looks fundamentally sound and prosperous. The company ranked 8th best in terms of quality and 1st in terms of valuation. My return forecast of 43.5% is also grossly overstated because of the valuation factor. But even when I remove the valuation from the return forecast, it still looks attractive with a 14.31% rate of return. The stock is down 1.67% since joining the watchlist in March of this year, after falling 3.54% in April. Up next we have Morgan Stanley with a 3.36% dividend yield. The stock is about 33% undervalued when compared to its trailing dividend yield of 2.24%. The stock is down about 16.6% this year after losing 7.02% in April. Since joining the watchlist in August of 2021, it is down a little more than 14%, mainly due to unfavorable returns in the past 3 months. Morgan Stanley ranked 4th in quality and 5th in valuation amongst the 31 stocks analyzed for May. My return forecast is pointing to 15.2% annual growth over the next 5 years. Up next we have Blackrock with a 3% dividend yield. The stock is appearing on the watchlist for the very first time. The share price declined 18.25% in April, and as a result pushed a dividend yield above my minimum threshold. Blackrock is down more than 31% this year and appears to look attractive from a long-term dividend yield perspective. The trailing 5-year dividend yield for Blackrock is 2.29%, implying a potential 23% undervaluation right now. The company ranked 3rd in terms of quality and 7th for valuation this month. I am forecasting a 13.75% long-term rate of return for the stock. These 5 best-ranked stocks are the ones I am personally planning on adding more capital to this month. The reason I don't invest in all 10 is because I select more stocks from my other watchlists each month, and I am not investing enough capital on a monthly basis where I can meaningfully split it amongst too many stocks. I don't always choose the top 5 stocks. Sometimes I pick more and sometimes I pick less, and it's not always in order of best ranked either. I look at each stock individually and consider the valuation and my current exposure to the position when I decide which stocks to invest in. The sixth best stock this month is Blackstone with a 4.97% dividend yield. The stock looks to be about fairly valued with a trailing dividend yield of 4.9%. Blackstone first popped up on the watchlist last month, and it did not have a great start, losing 18.95% in April. This means the valuation is much better this month, but maybe still not overly attractive. The company ranked second in terms of quality and 17th in terms of valuation this month. I am forecasting a 20.03% long-term rate of return for the stock. In 7th place, we have UPS with a 3.2% dividend yield. The stock appears to be about 12% undervalued as compared to its trailing dividend yield of 2.82%. The company first popped up on the watchlist in March of this year and is down 14.47% since joining. The stock lost 16.08% in April and was the third worst performing stock from last month's watchlist. UPS ranked 6th in terms of quality and 13th in terms of valuation. I am forecasting a 16.2% long-term rate of return for the stock. In 8th place, we have Restaurant Brands with a 3.7% dividend yield. The stock appears to be about 20% undervalued with a trailing dividend yield of 2.95%. It is down 5.05% this year, mainly due to a loss of 7.76% in January. April also wasn't the best month for the stock, as it lost another 2.23%. QSR has been on the watchlist since September of last year, with a total loss of 8.66%. The stock ranked 20th in terms of quality and 9th for valuation. I am forecasting an 18.27% long-term rate of return. In 9th place, we have Digital Realty Trust with a 3.22% dividend yield. The stock looks fairly valued with a trailing dividend yield of 3.25%. Digital Realty joined the watchlist in March of this year, and thus far has a positive total return of 9.31%, as it added 3.05% last month. The company ranked 13th in terms of quality and 18th for valuation. I am forecasting a 20.43% long-term rate of return. And in last place this month, we have 3M Company with a 4.05% dividend yield. The stock looks to be about 27% undervalued with a trailing dividend yield of 2.96%. 3M is down 18.01% this year and 5.24% since joining the watchlist in November of 2020. It's certainly one of the poorest performing long-term watchlist stocks. But like I said earlier, this screening process is not perfect. The company ranked 26th in terms of quality and 6th for valuation. I am forecasting a 15.51% long-term rate of return. Being ranked 26th in terms of quality may sound pretty poor, as there are 25 better ranked companies. But keep in mind that to make it onto the watchlist, each stock must pass my minimum quality screener, and then I rank all the stocks against each other. So it's not like the 26th ranked stock is significantly worse than the best ranked stock. Let's switch over and talk about past performance now. The top 10 best ranked high yield stocks for April lost 6.54% last month. This was the worst month for the watchlist since I started tracking it in November of 2020. The prior worst month was February of this year. That month's watchlist lost 3.31%, so April was by far much worse. Since November of 2020, a total of 59 stocks appeared on the watchlist. Collectively, they all had a return of minus 4.87% in April. VYM, Vanguard's high-yield dividend ETF, lost 4.2% in April. And SPY, the S&P 500 ETF, lost 8.78%. So the watchlist performed better than SPY in April, but worse than VYM. The year-to-date return for the watchlist is minus 5.29%. This is worse than VYM, that is down only 3.52% on the year, but significantly better than SPY, that is down 12.92% this year. Even after this poor month, the annualized return for the watchlist is a strong 24.73% over the past 18 months. This is slightly worse than VYM, that has an annualized return of 25.95%, but better than SPY, that has an annualized return of 18.4%. The stock market generally goes up, especially when viewed over longer time intervals. However, we do occasionally find ourselves in rough waters, like the current market environment. The best course of action is usually to do nothing. Stick to your long-term strategy and take advantage of opportunities when you can. Out of the 59 stocks that have appeared on the watchlist since November of 2020, 12 have negative returns since joining. This means that 47 have positive returns, even factoring in all the volatility in the market this year. The best watchlist stock has been Bank of Montreal, that is up 88.53% since November of 2020. In second place, we have General Dynamics, that is up 86.81%, also since November of 2020. And in third place, we have Principal Financial Group, that is up 84.22%, again since November of 2020. Not all 59 stocks have been on the watchlist for all 18 months, so another way to measure the best watchlist stocks is in terms of average monthly returns. In this ranking, the best performing stock is Atmos Energy, with a monthly average return of 4.79% over a 5-month period. In second place, we have Digital Realty Trust, with a 4.55% monthly return over a 2-month period. And in third place, we have Bank of Montreal, with a 3.59% monthly return over an 18-month period. I am also tracking how each monthly watchlist is performing in the long run, and how a buy and hold strategy using the presented stocks has performed. Let's take a look at the long-term returns for each watchlist first. After the poor results in April, only 7 out of 18 past watchlists are averaging an annualized rate of return of at least 12%. Granted, only the first 7 watchlists have at least 12 months of return history. And of those 7, the first 5 are performing better than 12% right now. The April 2021 watchlist is not far off with an 11.49% rate of return, and May 2021 is currently sitting at a rate of return of 9.75%. When comparing each of the past 18 watchlists to SPY, 16 watchlists are doing better than SPY, and the two that are underperforming thus far are February and March of 2022. To me, these are very strong results, and I think in the long run, each watchlist should offer a 12% annualized return. Let me move on to the buy and hold portfolios. I started tracking one at the beginning of 2021 and another at the beginning of 2022. The buy and hold approach assumes you invest equally in all 10 watchlist stocks each month and never sell these positions. For the 2021 buy and hold portfolio, the long-term rate of return is 26.89%, compared to 21.77% for VYM and 12.04% for SPY. The annualized return for this portfolio is a strong 19.56%. It has 41 unique positions with outsized allocations to Amgen and 3M Company. The 2022 buy and hold portfolio only has 22 unique stocks. Its return through April is minus 4.74% versus minus 3.52% for VYM and minus 12.98% for SPY. It's very difficult to beat an index fund, both in the short run and over a long period of time. My goal for this watchlist is to achieve a 12% average return in the long run, and not necessarily to beat VYM or SPY. I compare the watchlist returns to these two ETFs just out of curiosity. I think VYM and SPY are fine investment vehicles, but I prefer to invest in individual stocks myself. My watchlist presents a much more attractive initial dividend yield compared to both these ETFs. The 10 chosen stocks for May have an average dividend yield of 3.58%. VYM's dividend yield right now is only 2.66%, and SPY yields an even less appealing 1.33%. I also enjoy more frequent dividend payments my stocks produce, versus one quarterly dividend offered by both ETFs. That's it for today. If you enjoyed the video, please give it a like and subscribe to the channel. Thank you for watching and see you next time.